Fatigued investors are turning to resilient stocks. Here are the names that you need to watch that could provide you a refuge should markets turn south. It's great to have your company for the daily this February the 20th. My name is Jessica Amir. I'm a market strategist here with Mumu. Well, we've seen the key US indices hit brand new record all-time highs overnight, but momentum, importantly, is now slowing. And what I mean by that is the gains that we're seeing day to day in the NASDAQ 100 and the S&P 500 are only very marginal day to day. Sure, US markets, they're still up 4%. This is despite President Donald Trump threatening more tariffs overnight. And we also heard caution again from the Federal Reserve overnight. So this is why markets are treading water. Importantly, we're awaiting the next key catalyst that could take markets in either direction, either higher or lower, depending on what we see from the upcoming US jobs data and new home sales data. That'll really validate where we go from here. But right now we need to see, we need to note a couple of things. Firstly, investors are buying into sectors that tend to thrive when the economy is a bit fatigued and inflation is staying high and likely to rise, mind you, and interest rates are probably likely to stay where they are for now. That's going by what the Federal Reserve said overnight. So what are we seeing buying into? Well, we're seeing investors buy in droves into healthcare and consumer staples. So those sectors rose the most overnight. So stocks like CVS Healthcare, in case you weren't aware, that's up almost 50% this year. Just outstanding stuff considering it's only 20th of Feb. GE Healthcare is up 18%. But why are these stocks hitting brand new record all-time highs? Well, the fact is that healthcare spending is hitting record all-time highs. New research suggests that healthcare spending is expected to grow from about 3.8 trillion US to 7 trillion by 2031. So that'll be a tailwind for the healthcare sector. Secondly, note that investors are being rewarded being stock specific, as in companies that are growing their earnings. They've got gusto regardless of economic noise. So we're seeing stocks like Garmin rip higher overnight. It's up 13% in one day. Just outstanding stuff. So they reported record revenue of $1.8 billion after revenue surged 23% in the quarter. And why is that? Well, it's thanks to fitness watch sales rising 31%. We've been speaking about Garmin a lot. I flashed up my new Garmin watch a little while ago. But the fact is that Garmin has upgraded their yearly revenue to $6.8 billion. The market only expected yearly revenue to be about 6.67 billion. Basically, this tells us that momentum is there, it's strong and it's growing in fitness tech, and perhaps that's something you need to consider, maybe take seriously. Other stocks making markedly moves higher overnight. Tesla is now up 10% from their lows. It's trading at as we can see on the screen, $360.56. But basically, bets are on that Tesla might get back to that $488 record all-time high on a couple of reasons. One of those big catalysts is that Cybertrucks are expected to be bought in mass scale by the US government that is planning to buy them as their armored electric vehicles. And for those that didn't know, Elon Musk's companies have now risen an eye-watering $613 billion in market value since the US federal election. And you probably would expect that to continue. A very different story for the Aussie share market, though, that is under extreme pressure. The futures suggested earlier a fall of 0.5%. It's really important to note that a couple of things are now pressuring the Aussie share market here. We've been saying that this might be happening for some time, and naturally markets don't go up in a straight line. Let's remember that. So just because the Aussie share market is heading lower now doesn't mean that will be down and out for the rest of the year. But remember that markets move in cycles. The catalyst right now pressuring markets lower is that unemployment is expected to rise. Secondly, bank stocks are bracing for a correction. And thirdly, overall earning season, just after this morning's earnings results, are now tipping far weaker than expected. And this is why the Aussie share market perhaps is bracing for a correction. But what about the Reserve Bank of Australia's rate cuts that happened this week, I can hear you ask? Well, we've got to remember that rate cuts have got a lag effect on the economy and, of course, the share market. So you wouldn't be expecting them to, I guess, benefit the market and the economy for some time. So we really need to focus on stocks that are able to break higher and grow their earnings, regardless of what is happening right now. One of those stocks that's on my radar is Zip. So Zip reports next week. The market is expecting record profits. Again, focusing on companies that are growing their earnings regardless of the market noise. So the buy now, pay later company is expected to report record revenue of over $1 billion for the first time ever. If it can achieve that and upgrade their outlook for the year, you'd be expecting Zip shares to extend their rebound. And when I say extend their rebound, we can see on the chart here that Zip shares are up from their lows. They're up 18% off their lows. And the technical indicators for those technical analysts out there, they probably also see that they look really interesting and perhaps even compelling, suggesting that buying could pick up here in this stock, regardless of what happens next week. So that's why you should be watching Zip. Speaking about companies that have delivered earnings results this morning, not so rosy for the most part, but it looks like we did get earnings beats for Telstra and Regis, so they should be on your radar. As for negative potential earnings headlines results, we saw disappointing earnings come out from Rio Tinto, Auckland International Airport, and the AI data center darling Megaport. So all three of those companies delivered far weaker than expected headline earnings results. All in all, this is why we're saying the narrative for the market might potentially be bearish, but you'll always find some winners. Great to have your company. For more information on stocks as mentioned today, head over to Moomoo.